Hello, hello. Good afternoon. Welcome to the weekly market opening. Today is April 19. It is 6:23 a.m. Eastern Time in the US. We have some news regarding the war. Um, well, there's a lot of uncertainty that is going on. We don't really know what's going to happen today or tomorrow or the day after tomorrow or the next minute by that instance. The last days, this market has had, trying to make sense of market is just a silly enterprise. Markets just don't make sense. And if I think just because there's a war, just because Iran is doing this or is doing that, prices or markets are going to behave in certain way, that would be just looking for problems, right? We had This market has had been in an unbelievable, right, really uh, a spectacular short cover rally, right? Shorts had been squeezed the hell out of this market. Just check it out what happened here. This is the weekly. This is the weekly time frame. And after believe was 3 months here in range, it just has a significant break. But it seems big, right? This big it looks huge, but if you actually do your homework and check this, we have 7,031, right? That was the previous high. And take low of this market 6359.5. And divide that by, what we have is actually 9.5, 9.6% from the highs, from these highs up here, from this one, down here, all this break is not even 10%, right? It's a little bit less. It's 9.5, 9.6%. And look at this recovery this market has had, man. It's just unbelievable. It's not in less than 2 weeks. Yeah, or pretty much 2 weeks has had a huge, man, huge short cover rally. Um, the why I say it is or it was or it is or was a short cover rally, because the way how this market was reacting, right? It was a huge upside accumulation, breakout, accumulation, balance, some balance breakout. Again, the same thing over here, right? This one over here, accumulation here, accumulation here. And this one here seems like an exhaustion gap. The one that we have here. Always paying attention here, in the same way how we have these big breaks that usually come to an end with a bang, right? With a huge volume. Look at look at the volume that we have Friday relative to the previous days. Look at the volume we have. the ES, right? The other one was 90, and this is the ES. Really, I think it was a significant increase of volume relative to the previous days there. And above all, the formation here. Now, it is just curious, but as up, as up, as the market opened, you know, I didn't know this was going to open with a gap, you know, but I remember the last week, right? What happened? Huh? We have a big gap, you know, kind of like 100 points, something like that, if I remember it correctly. And then you have huge, man, huge recovery, right? And the market almost opened at the previous day, at the last day, at the high of the previous day. Is that going to be the case today? I don't know. I certainly have my doubts about that. What I was going to say about this opening is how we have volume here in this area. Now, ES has the same. This is NQ, right? This is NQ down here, and this one is ES. And this is a particular thing. Now, you cannot see this in just without in any regular charts unless you have volume. This is a 5 minute chart, right? This is the high, the period 26,660, something like that, which is this one here. Candlesticks show, you know, how far the price has reached, but the histograms that I have here is nothing here. It's just dry. There's no bias up here. It is kind of, to me, kind of like the opposite, you know. That's why I say it's quite interesting to me, because something very similar happened last week, but we have this, but last week, last opening, we had this formation. This formation here was in the lower side. Now is in the upper side. So what that say? And unless this area here is filled with volume, and this is the beauty of the histograms, that I can see volume at any specific level. Right? This area is being rejected now. Now there's some trying to build, they are trying to build something here, maybe to the upside. I don't know. But the EAS is forming, it's kind of a little bit clearer here, right? We have the same area. I don't see there is a convergence in here. I mean, there's a synchrony between the ES and Nasdaq yet, because what I saw here in Nasdaq is lower to where the ES is right now. Okay, this would have been more interesting if right now this price would have been here, for example, just as the ES is here. It seems like this is kind of like a support area, and it's not a coincidence that it's a 7,100 here in the ES, and Nasdaq is 26,600. There was tremendous amount of trading in Nasdaq around the 25,000, and now something similar maybe happening around the 26,600. I don't know. Those ones are just observations, right? Now, I'm going to expand my histogram charts to highlight how we had volume, higher volume Friday at the closing up here. Yeah, but the difference from this closing relative to the other ones that we had the previous have in the previous days is that, I don't know, look at this one. This one's kind of like not that far from the highs, but it is not at highs, right? But check the previous ones. What happened here in this day? The 15th at the highs, market closing at the highs. The 14th at the highs. The 13th at the highs. It is just very peculiar, right? Tremendous amount of strength. And what this told me, and that's something I mentioned, I guess, a couple times during the week, is when I see this kind of activity at the closing, as the market is in short covering mode, right? I just don't want to be in the way. If I don't have the strength or I cannot be long, the last thing I want to be here is short, because being short is extremely risky. That was the appreciation, the observation that we talked, I believe was Thursday or some days from last week. Now, the current week, the current open, all the let's maximize now market profiles. You got the market profiles here. We have a gap down here, gap up here, and this is huge gap down below here. Right, and this marks the orange ones here, orange one here, orange one here. Those are the marks, right, from those closings with high volume. And check how the formation, how emotional it is. It was not the difference from another short covering rallies. It was that it wasn't, right. It didn't happen in one day. It happened, throughout the week. It was evenly distributed in 1 week, 4 or 5 days, right? 1, 2, 3, 4 days. It's just a tremendous short squeeze the market has had in these shorts. But those kind of squeezes don't last forever. Eventually they will come to an end. And if there is something there will be some rebalancing, and probably the market will break, will try to find a balance, an area where the fair value is agreed between the buyers and sellers, and from there the market can continue going high. If this is something good, all right, but again, I'm not trying to make sense of the market, all right? I'm just trying to get them to internalize the data, the information the market is giving to me. As we speak, I know there is still more than 12 hours before the opening, but if the market opens in this area, below this low, or even below this high here, that will be the market closing a gap with another gap, which is just signs, right? This is, again, this is more signs, more evidence that the amount of uncertainty is extremely high. The risk remains high in this market. As simple as that can sound. Nothing else. Now to bring back my weekly charts, my multi-time frame charts here. Just check, this is just unbelievable, man. Tremendous short covering here. That's unbelievable. And this trend line is coming from, I don't know how old this trend is. It would be irrelevant, but what makes me think there can be something here is where this one, where the low or the high this gap is, right? There might be some type of side here towards this one, or maybe something fast. Who knows, man? For now, this high here is support to me. 71.65. Where the market is now? 71. If the market opens below that number, that will be resistance again, right? Not much. I can't see really any kind of, I would say, opportunity now. I think the market needs some time now, maybe 3-4 days, maybe the whole week before before we can see any kind of setup, or quote unquote setup for any kind of trade that we may do. I will take this opening or the beginning of this week, with calm. Try, try to take it easy, man. Don't. There's no hurry. We're not in a hurry to do anything here, anything crazy. Got to be very careful here. Now, what do we have for this week? This week, retail sales on Tuesday, and after that, there's nothing else, right? Nothing that relevant. Of course, any tweet that comes from the White House can derail anything, and I believe most of the news can come from the stock, right? We have Netflix last week. We had Netflix, and by the way, let me check how much Netflix is now. The market just didn't care. Has a big break on Netflix. Let's see how it closed the week. All right. Look at that formation, man. Look at this big breaker in Netflix. The next thing I believe is, I think we have Meta. Meta the 29. We still have more than, I believe it's next week. 29 is next week. Tesla also is, Tesla says the 22nd. Yeah, Tesla is Wednesday. And the rest of the big tech, it also is the week after. Yeah, 29 Apple, 29 Google, 28 Amazon, 28 Microsoft, this is where all them are. Huh? And look at the recovery that's happening here. You can put a line here. Huh? This will be something like this. Probably some it can test this high before doing anything like this. This is just this kind of movements, man. Just look at this. The same way how it went higher, it can go lower again. It's just get too long, too fast, right? Too much, too far, too fast. In Amazon, those are the characteristics of short coverings. Let's look at what happened in Netflix, for example, right? Look at this. Look at what happened here. There is a killing, right? Then we have some rebalancing higher, and look at, and after that, what do we have here? I would be surprised that the market might continue to go lower here for Netflix, because we find some kind of bottom around this area. All right. Wherever you go, do 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 do. Let me close this one. Okay, let me call the ES here. Now check what's happening with the 50 moving average in the ES. It's already below the 200, right? Traders love those kind of indicators. 250. Now this one needs to come here. So we have 200, 150, just like that. Nasdaq. This is just unbelievable. The formation we have here, man. This is the trap here. Okay. How the trap has been set here. Support. It didn't close this tiny distribution we have here. And then short squeeze there. The 200 moving average here is further higher. It's pretty close to the 100. And look at where the 100 is. Right at the low, this bar low. The Dow. Listen, we were talking last week that Russell had, I think, had the better chances, the better odds of having or keep having some kind of upside. Because at the time, if I remember, well, at the time, I think it had something like this. It was something like this. And check this highs here. You know, this one, this one, this one here, this one here. What happened with this one here? Look at Biggs. Biggs went all the way down to 17. And check this out. Check what's happening to crude oil. Now we say that crude may be something that it is a shiny object now. This is coming lower. It's opening at low. But it's interesting how the market is reacting to that. Right? I have my doubts that the market can retake the highs of Friday's high. That's not impossible, though. But I would be paying close attention to this level here, to this 71.60. I think this level is a pivot. Copy extended rectangle. What is horizontal line? This is a pivot. This line here. I would call it Friday's POC, the 71.59.25. In the lower side, I guess I will call it this one. This one down here. It's very interesting to see what the market does if it comes low, if it can close this distribution down here. Something that I am watching now in this period, I mean in this time, are the levels, right? The high volume levels. I am using those as I am observing what the market does relative to those things. I can see, for example, right now, as we speak, the gap is being closed. Okay, it's far from this high volume node in the upper side. It's also far from this high volume node in the lower side. It's kind of like about the same. All right. Let me put it back where it was. And now we're going to proceed to open a second instance of my charts. Oh, I guess I can show it. I can call this one here. This is fun, but these are 5 minutes. These are 5 minutes. Charts. But what I have here is a 30. It's average of 30 minutes, 30 highs. And this is the average of 30 lows. And after that, I have this line here. This is just a 10 simple moving average. That's how I measure. I find out that that's the better way to track momentum. But I'm going to open here. They might see too many draws here. But I want to open daily, okay? I got a daily here. Remember these orange ones, what those marks are. There's something weird here. This is Friday 4th, 16. My bad, it's not Friday 16, it's 17th. Okay, let's check the 4 hours. Fingerprints here. This area might be something the market could aim. Fingerprints there. A little bit more fingerprints here. More fingerprints down here, which is where this gap is. No, I this is not good. Let me open. I'm going to open my second instance. I want to check my charts over there. It's kind of too confusing, this. All right. Opening. Okay. This is what I have here. This is kind of like weird. Now this is a 60 minutes chart. All right. 16. It's not 419. This is 419. Oh, this is today. But this is opening to the upside. There's something missing here. It didn't close. Did the market close at 70, 70, 78? No, right? The market closed at 71.65. It's not showing here. There's something here. What the heck? Let me see what's going on here. Intraday chart, data limit, back period, session times. 9:30, 15, 59. Use every session, yes. Started 16 to 9. What the heck, man? There's something. No, okay. I know there's something. There's something going on here in my charts. Entonces, 13. This is what I look at the break here. Then the upside. When the rebalancing happen in this area, it's not sideways. Right? I'm talking about the 10. It kind of still has a slope here. But each time it happens, the slope is less and less, right? Until it becomes, I think it becomes negative here. I was checking kind of these kind of areas, and it goes feels it goes like this. Next time a little bit less, and next time flat to low. This is a sign this market is getting exhausted. The rally, there's exhaustion on the rally, and there might be some rebalancing that may be right in the horizon, and that in turn is a sign, right? A sign that the risk is increasing when or if I want to do anything to the outside. I need to check this. There's something going on with my charts here. One day is missing here. That's not good. Again, crude oil. It is surprising. This is just the other way around here. We have a liquidation here. Liquidation, you have a rally here that took the high here. I believe there's a gap. There's no gap here. But the market opened at the highs here relative to Friday. Gold, gap into the downside. Bitcoin trying to hold this range. Now, potential dollar falling here. This is the euro, which moves on. It's just the opposite way there. To the dollar. Now let's check the other markets. Look at this crude, man. Look at this crude here. It is just all over the place. It's gap here, gap here, gap here. It can easily go back higher, right? But I won't be surprised if it tests or if it tries to get back into this range. Okay, right now is my charts are charging. Okay, what the heck? Wait a minute, wait a minute. No. Okay, let's go back to let's follow with the dollar. Just check this beautiful trend, right? Very mechanical trend now. It's been taken back, or it's been rebalanced here. There's a lot of back and forth between the 150 and 200 moving average. It can be anyone here. Gold is trying. I think it looks like gold is trying to take back this area here. There's a tiny gap here. There was a gap in this area, but has been almost filled here. And below that, there is no gaps. But you can see how the moving averages are separated here. We had the 50 at the highs, 100 below, has been tested like 3 or 4 times. Now the 50 has been tested, and 50 is acting as a resistance here. Very mechanical high, so that's not a good high. It might go higher. And let's check bonds. Ah, boy, this market is giving me chills here. Oh boy, this is no good, man. I think what can happen here because nobody is paying attention to this. Nobody's paying attention to this markets here. Just look at this formation here. Look at these lows, right? Look at this how these lows are forming. We got a fake out here. Again, getting back closer to this bunch of moving averages all together. If there's a breakout of this channel, can take this moving average. I start trading above now, but as I can see now, the 200 is higher, followed by the 100, and then we have the 50. So it's a market to the downside. I'm going to try to go any kind of upside here until things become clearer. It's a market to the downside. Yeah. I think I was Thursday. I was here at the close. It was interesting. It was very interesting. Because Thursday, we have the last 5 minutes, right? The last five, both the 50, 1550. What is this? I don't want 30 minutes. I want 5 minutes here. Okay. Boom, 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 boom. What is 4 p.m. Is this? Are you there? Tuesday, not Tuesday, the one Tuesday, one for Thursday. Thursday. Where are you? Okay, Thursday. Where are you Thursday? Friday, Tuesday close. Thursday close was the here. Right. The last how the last at the 50 mark we had tremendous amount of volume. But the volume that came at the 55 was even higher. Suddenly potential upside there. And the volume that came at the closing added to those last 5 minutes, right? Both of them going higher, right? Signal that there could be something to the upside yet. And the question, and this happened on Tuesday as well, the question was how the market can close, right? How the market can close after this tremendous upside, in this kind of environment, when the uncertainty is tremendously high, there's a lot of uncertainty. Nobody knows what can happen over the weekend. Nobody knows what kind of tweet, or if any tweet can come out of the White House. And it is just crazy, right? It will be absolutely, um, you know, what's the word? Illogical, nuts, right? Absolutely nuts to go long or short, any having any kind of position open into the weekend, right? Because anything can happen during the weekend. That was my question, right? I wonder if this market can close at the highs, or there can be some kind of liquidation, some kind of rebalancing at the close. Just based that um, on what I saw here. Now, how this market close on Friday? Check this out. Again, we have big volume at the close in the last 5 minutes, right? But the most important piece of information came here when the market has this break previous to the close. I guess this was like 3 periods before the close, right? But it didn't have anything clear here, right? It was just, I believe, it looked at these loans here were forced to cover, but it couldn't try. It could, the downside movement couldn't gain any momentum to the downside. Market ended, closing with a rebalancing in this area here, just a little bit below here, and you can see lower lows here. But I think, did I see any high here on Friday? No. But what breaks the mold is this, right? This is one low here, the next low is higher, and this one goes lower, right? The other thing is this is low, this is lower, this is lower, and this one here is higher than this. So the market just had no idea what to do, right? Market lacks any kind of conviction, and what makes me think here is what I'm seeing is just short-term trading. Okay. Okay, I don't have anything else here. Again, as I say a couple weeks ago, I have no intentions to do uh, anything here. I was just watching this market, the craziness that was happening here. Most of the week I wasn't here, but I was just keeping track of the market in my cell phone, but not really committed to do anything in this kind of environment. Did I miss trades? Probably. Well, more likely I might have missed something now in hindsight. But if I am not in the market, if I'm not following close, that would be risky as well. Just because I think something may happen, that's not going to be enough reason for me to be back here. All right. I wish you have a wonderful trading week. What I had from this opening, I still don't have enough information to have an idea of what may be the tone for the week. But for what I have seen, I would wait um until the opening to see where this market opens, right? If it opens back, oh come on. Oh wait, where are you? This one here. Wait a minute. Okay. Okay, I guess I messed up here. If this market opens back up here, I will keep that would be something different if the market opens down here. If it remains here in this area, in this lower side or below this distribution, I would see that as a sign that the market may have gotten too long, right? Some sort of rebalancing may happen um, in the upcoming days, and that how long that's going to last, I don't know, right? But you have seen the sharp upside that we have in the past 4 or 5 days, and that when markets do that kind of stuff, usually it's followed by some kind of rebalancing before they can go any higher or before they can break. All right. Okay. Have a wonderful week. Stay safe. Hope we'll see you another day. Bye bye.